So we are well past the halfway mark. In fact, I'd say we have maybe about another 20% of the S&P 500 earnings yet to be reported. Most have come out. I took a look at 10 stocks in the news that have recently reported earnings. Now, of those 10, I'm looking at these and I'm like, all right, all of these are great companies. There's some that have fundamentals that are different than others. But of these top 10, what are the markets telling us? Who's poised to run higher over the next, say, 30 days? So what I want to do is I want to highlight these 10 companies with you real quick. I want to take a look at two easy scans that I think everybody else is just missing. And I'll show you what goes to the top on my list of these top 10 popular stocks. So here you go. I'm going to blow this up so that everybody can see this. I'm going to start with Spotify. So Spotify, an e-commerce stock that a lot of people use. Free cash flow in this company. That's that cash that they use that coming in is high and has been rising. This is great for this company. This was a big piece that came out of their earnings, was something called free cash flow. Now, Palantir, customers. The customer list at Palantir is at all-time highs. And let me tell you something else that's happening with Palantir. Bitcoin being close to, and I say close, but we're probably about 10% off the all-time highs. But as Bitcoin moves higher, that's actually good for this stock as well. Uber. So Uber really only has one competitor in this business right now, and that's Lyft, and they are blowing the doors off of Lyft right now. They have huge cash flow, where if you looked at this company just a couple of years ago, it was all about growth. Now they're actually pushing money to the bottom line in cash flow. Google, even though Google had a negative reaction to its earnings, what was it, a week or so ago, they have pushed, they've got $10 billion in cloud growth right now. It just huge with the cloud growth business, right? Next up is Philip Morris. Here's a company that you would think is not on my list, but sales of Zyn up ninefold since 2020. Ninefold, 900%, folks. All right, so that's huge news for Philip Morris. All right, Amazon, always a very popular stock. So Amazon has several different ways that it generates revenue. One is through their AWS system, cloud-based. They're also up big, 3,000% larger than it was about a decade ago. All right. FICO, which is Fair Isaac, this financial company, this is amazing. These guys have profit margins of around 88% in what's called their scores division. All right. A financial division of the company. 88% margin. Huge. And if you take a look at the price of FICO, then you can see why that price tag is, I believe, bigger than anything else on this list. Cloudflare is next. Saw its biggest quarterly jump ever in revenue. All right. Down at the very bottom, we're going to round out the top 10 with NVO. That's Novo Nordisk. Ozempic, when you think of NVO. And although Ozempic has gotten a lot of flack, in fact, we were looking at this one last year as one that, if you look at these companies and you look at these industries where everybody just talks nothing but greatness about them, that's typically the time when you don't want to own that company. I remember Beyond Meat. I remember the plant-based foods when all anyone could talk about on mainstream media was how great plant-based foods were, and that was their top. Same thing has happened with Ozempic, but now what's happened is it's possibly becoming more of a value play. NVO had 107% revenue jump this quarter, but what folks are concerned about is the forward. And rounding out the top 10 is a fan favorite, Fortinet. We were talking about just last week. We'll revisit it again. Gross profits up 12x in the last 12 years. Now, how do I take this top 10 and shuffle the deck and see what runs up in terms of what I like? All right, well, I look at a couple scans. This particular scan is a scan where I just took all 10 of these stocks and I threw it in and I said, all right, I want to do a price scan. I want to do a volatility scan. Price scans for the stock trader, volatility scan for the option trader. Here's the price scanner. What we did was we took the last quarter last 13 weeks, and rank these to see where the stock price has been as a high 13 weeks ago, as a low 13 weeks ago, and where is it at right now. Uber, Cloudflare, and Fortinet are on their 13-week highs, right? Palantir, Spotify, Philip Morris are very close. So when you see Palantir there, and you see it at 99.29, it literally is it's right up there hitting that 13-week high. Spotify 98.76, same thing. Philip Morris 96.77. Then Amazon drops down. You can see Amazon is 70%. All right, it's in the 70 percentile of its high-low range for the last quarter. Google, about halfway there. Novo, down in the bottom 23. And take a look at Fair Isaac, which was, its high was $23.82, $2,382. Its low was $18.09. It's at $18.58 as of Friday's close. So down near its bottom. All good companies, all have great fundamentals in one area and another. But what does Wall Street think about this? Well, Wall Street likes Uber, Cloudflare, Fortinet, Palantir, Spotify, and Philip Morris. Not so much on the bottom four. So what I thought I would do, take a look at a couple of these stocks. So here's Palantir. Palantir coming into Friday. Big jump after earnings. I mean, they were trading around 85 pre-earnings, jumped up above 100, stayed above 100. That's the interesting thing. Stayed above 100, close to 110 and 80. This was on Friday. It might be due for a pullback, and I would say if we get below 100, that we could attempt to try to close that gap. But still very strong on the charts. Strong company, strong charts. Cloudflare, same thing. I mean, they just released their earnings, and they're just blowing up right now. Thursday was at 100, was around 140, 144. Friday, we jumped as high as 177 before pulling back to 166.66. Is that right? Is there 6 sixes on that close? Looks like it. And Fortinet, we talked about this one last week. It's up 7 points since we were looking at it as one of my favorite stocks to move higher. What's interesting is it's moving into an area where it's likely to see some resistance. In fact, I see resistance up around 117. So still maybe another 10 points or so to the upside for FTNT. That's looking at this like a stock trader. We want to look at this like an option trader, and I need to pull some more data. So what I did very quickly is I went and pulled a chart of the IV, implied volatility. Implied volatility is really kind of the angst of the market, where stock traders look at the present, all right, and they're able to look at a past chart and look at the present close of a stock to try to determine its future. Option traders, by option price, create a range, all right? They create what I call an expensive premium range and a cheap premium range. We're able to see that because we collect all that data. And based on all the data that we have, when I'm looking at the short-term options, these are the options that expire between 7 and 30 days. And I look at where they have been, right? Where they were, where they have been. I find that Spotify is the cheapest on the list, all right? And what I'm seeing is this area here. This is between a 1 or 0 and 100. 0 means it's the cheapest it's been during the history that we're pulling. 100 means it's the most expensive it's been in the history that we're pulling. So anything closer to 0 is cheap. Anything that's higher than 100 or close to 100 is expensive. All of these are cheap. But if you want the ultra cheap, we're looking at Spotify, Amazon, Cloudflare, Novo, Fortinet, and Apple. I would even say Google. I mean, Google and Philip Morris could be in there too. But I mean, you want those bottom 15%. That's where we are. So if you take the stock list that I showed you, all right, and you take this list, and you're saying to yourself, I want to be an option buyer. Well, then Fortinet makes sense, and Cloudflare makes sense, because these are the ones that we were taught that I just showed you. And it doesn't mean those are the only ones, but I take a look as a stock trader. I'm looking purely at present option trader. Yes, I'll get an idea of direction based on patterns, and then I want to find out which ones offer me the lowest cost, the lowest risk, highest upside potential.